Due to the crisis in Ukraine, the global growth will be lower this year, as per the reports of the international organizations. The flash PMI estimates from US and eurozone are showing mixed trends. Inflation in India remains a big concern. Hi, I am Moumita. In today's episode of Economic Roundup for the week ending 22nd April 2022, we will be talking about all the important economic and financial indicators and events that happened last week. Let us begin. Global reports. World Bank has reduced its global growth estimate for 2022 to 3.2%. Previously, the estimate was 4.1%. The IMF has released its World Economic Outlook report, where it has reduced the global growth number to 3.6%. Previously, the estimate was 4.4%. Last year, the global growth was 6.1%. Following the invasion of Ukraine, the recovery prospects post COVID has gone down. There is also high and volatile commodity prices, the supply chain disruptions, all causing the downward revision of growth numbers. The downward revision has been mainly for Europe and Central Asia, including Russia and Ukraine. India's growth projections has also been lowered down. Moving to China, monetary policy meeting. The People's Bank of China kept its policy rates unchanged in the monetary policy meeting. However, the bank has reduced the RRR or the reserve requirement ratio by 25 basis points. This will be effective from today. This move by the bank will release 530 billion yuan or approximately $83 billion of long-term liquidity to the economy. Growth has been slowing down in China due to the crisis in Ukraine and the rising cases of coronavirus. Talking about GDP growth, in China, the first quarter of GDP growth was 4.5%. This was higher than the consensus expectation. However, this is a low number because the consumption growth, export growth, and real estate sector growth continues to remain low. The country has an official target of reaching a 5.5% GDP growth this year. Moving to eurozone, the flash PMIs for the month of April were released last week. The services PMI improved in April. This was due to an improvement in leisure activities and travel. However, the manufacturing PMI slowed down due to supply chain disruptions and high input prices. There has also been a slowdown in new orders, so demand may also be slowing down. The auto sector was particularly hit, and most of the other manufacturing sectors also recorded slower growth. The only exception was the tech equipment sector. Within Eurozone, Germany was most severely affected. Moving to US, the flash PMIs for the month of April was released last week. The services PMI in US fell in April. The flash composite input price index, which is a measure of the raw material prices in manufacturing and services, increased sharply in April. This has pulled down business sentiments. On the other hand, the manufacturing PMI increased in April. The manufacturing units are also facing high raw material and fuel cost, but the manufacturing employment index improved and its outlook also remains positive. Moving to India, the wholesale price inflation in March increased from February. The inflation continues to remain high and in double digits. The rise in inflation was broad-based. The fuel inflation, which was in a downward trajectory, reversed its trend in March. The rise in inflation has been mainly due to the rising raw material prices. That is all for now. Thank you for listening. I am Moumita. We'll be back soon. Bye bye.